What's up, everybody? Thanks for stopping by. Today is December 29th, the last Friday of the year. This week was kind of slow, and so some of the traders didn't really take trades this week, but we're going to break down the trades that they did take. And the good thing is you want to identify when not to trade. And slow weeks where it's a short week, either data week or whatever, you got to identify those days. You know, if you're up to it, then trade it. If not, then see if you can identify your trade, take a screenshot, and see what it see if you play it out. You want to be able to at least, even though on the days that you don't trade, I highly recommend that you at least see if you can identify a trade that would have been good. And I would only try to identify grade A setups on data days. Um, So yeah, this week we'll jump in. This is week 4. We're gonna jump in deeper into their strategy and adding more tools. I know some some traders are don't like certain indicators or don't like any indicators at all, but some of them do help, especially when you're a new trader and you don't know how to exactly identify price action. There are some tools that can help you identify either reversals, bounce points, resistance levels, anything like that. And I'm for I'm the type of trader that everybody has a different flavor, and every trader will be different and how their eyes see the chart. If you need an indicator to help see the chart, by all means use it. If you need a support and resistance levels or zones, use them. If you combine them all together, it's going to be that much the better. But I definitely recommend that you concentrate on one and get one down before you start jumping to other methods. Because I've come to find out that they all line up together. No matter what system you use, when they all line up together, coincidentally, it's a strong level and it plays out in that direction, whether it's long or short. So we have Luna's trades right here. We're gonna break down. We're gonna break down his trades of the week. Dell took the week off because he just wasn't comfortable, or he knew it was gonna be slow and the volatility wasn't gonna be there, and that is with short weeks. Some people or some new traders get burned or blow up accounts because they just want to keep trading and trading and trading. Instead, in weeks like this or data weeks, you should be kind of just sitting back, see if you can identify your grade A setup, take screenshots and see if they played out. Either play it on sim or just take screenshots if you want to not trade for the day. So this is Luna's first trade. Was it your first trade, Luna?
I was on mute. This is December 26th. That was a potential, the first one. The second one is the one I took. Basically,
Oh, okay.
yeah. But this one I did
Yeah,
not take, although I should have. From looking at it right now, you're right. I should have taken it.
sometimes it might look like you should have, right? Especially after the fact, especially since you switched the trade. I mean, you took a picture of the whole trade because with the 50 SMA right here or right here, where is that?
Yeah,
Yeah,
it was a little
right,
bit sloping up.
right, right there. Your next target, even though it's lower high, and another even a lower high, be right here, like that. Um, your target, since it already busted through, right here, what you would have wanted is to either hold the 10 right here and then continue going down. Right here, it created kind of a higher low off the 10. So it kind of looks like it would have popped up with this one right here. Especially because you already broke above the 10, came back and you broke it, but let's see what the volume look like. See, you got a green volume beat right there. See all these four?
Yeah.
You got a green volume beat, so it's gonna be coming in. Once you see that, once you start getting this and you got a higher low, you gotta be very careful. Especially if you're in short right here. If you're in short right here, because it's a grade A setup, it is. I'm not gonna say it's not, but you have to look at price action. You have to be like, okay, it's a higher low off of this area over here. So it's either gonna create a lower high and go down right there. Because I would start looking at this level right here. And if you got in right here, and if it breaks above that level, you might want to think about just letting it stop you out, right? Because your stop would have been right here. Or just stop out at break even. Break even or even stop out like over here once it breaks above the 10. Once that candle closes above the 10, and this is where it helps watching the 10 SMA as on live, right? When it's on live, this SMA right here, it can flap
Yeah.
up, it can go straight, or it can go down. That's what you want to be is looking at that, right? Because you're slowly going to be like, oh shit, if it's like steep up, then you know it's strength, especially if it closes above it. If it
Right.
closes above it and it's green, okay, be on the lookout because the next level it's going to break is a 50. And if there's no other moving averages above the 50, then guess where it's going? It's going to go over here up to this level.
Gotcha.
You see what I'm seeing? So it's going to go up to that level. Can you tolerate that big of a loss? Or should you stop out where you stopped out or get out where you break even? Those are questions you have to ask yourself as you see price action and don't get scared. You know what I'm saying? Because if you start looking at, you only have volume to see, and that volume beat would tell me a little bit of strength. But you have to keep watching the candles develop. Like the next candle, is it going to bust through the 50 SMA right there? Or is it going to, is it going to go like this, bust through there, and then come back and go up? And that's what you have to see the speed of the candle. Is it violently moving up and down, or is it just like steadily going up?
Okay.
Those are things that you should be keeping an eye out for. Like this candle right here, did it get sucked up right away, or did it hit the 10 and it slowly got buyers back in? So if you would have got in here, you probably would have. We don't know yet because we didn't take a screenshot, but those are things that you should take screenshots because let's say, okay, you get stopped out up here, you could then, look at the volume and what are the other indicators. And this week, I recommend that you add the MACD, no changes, default, the MACD and the RSI.
Okay.
And I'm gonna slowly show you how to look at price action or the moving averages so they can signal like right here. Once you get this 50, once you get this 50-10 cross, that's not like, remember, you have to make it an objective rule. How do you make it an objective rule? You have to look for confirmation. You don't get in and you don't create subjective rules. You want to create objective. Subjective is, oh, there's a 50-50 or there's a 10-50 cross, I'm getting in. No, you have to take the whole picture into consideration before you make a decision. Right there, just because you got a cross, you don't really have confirmation of it going down. You get it later over here. You get it twice. You get it once right there and once right there.
What time was this one? I think the next screen will show the other screen will show the time.
This one?
Yeah, if you look at if you want to see what happened with the action, I think it was the other one was 11. Screen.
Yeah, this was 11. And this was on the same day?
Yeah, so 10:50 was the cross, and then at 11 was the confirmation, where the other one.
Yeah, 10:50.
Yeah. It take,
So perfect. If this is what happened next, then it explains exactly what I just said.
yeah.
See, you would have got in over here. Remember, you said you got in. Oh, it shows that you got in over here, right?
This is the cross. 10:50.
Oh yeah, yeah, because this was the second time.
Yeah.
Remember, you take this tip. Usually, when it breaks a level, it comes back and tests it, and it tests it 3 times. On the fourth time, it's probably gonna break through.
Okay.
See, so right here would have been would have been like your first, you know, think about getting in because it's your confirmation, right? You got the cross, and then you got your confirmation there. But you got in right here. You probably would have got in on this green candle, but the thing that I would look at is the RSI and the MACD, which you don't have, but you have volume beat right here. You got a volume beat right here. Yeah. So that volume beat right there is telling you that it's gonna go down. Oops. But where's the next from this volume beat? Because it's right here. It hit the 50. The next resist or the next level should be the 100, which is right there, right here. If it breaks that, you want it to hold. Like this candle right here, once it breaks above here, once it breaks above the 100, you should be taking profit, especially after this one held and it shot above the 10. Because look at this. What did I say last week? The next fastest moving average should be pointing flat, right?
Yeah.
It should be
It's
like
going
this.
up.
It should be going like this instead of like that. So that right here, this because the next one has to be flat because that's gonna tell me that this is actually gonna go like this, right? And this is flat. And this one will probably be over here. And then the 10 SMA would be like right here. But you don't see that. This is a 200, right?
This is 200, and the other one is the
6.
666. Yeah.
Yeah. See, so you got that right cross right here. This cross right here is telling you that there's going to be a longer term,
Upwards
lo-
movement.
yeah, up movement. Because it usually goes until the 666 and the spread right here is 15 to maybe 25 points max.
Okay. I did take this one, although when I saw the lower high, I kind of figured out it's gonna probably reverse. I did take it short on take short this one, but
Yeah.
then I should have just exited that trade because it's forming a long setup,
Yep.
I think. Yep.
Yeah, it is because look at the higher lows. You're still in a higher low trend.
Yes.
So like on a wedge breakout like this, so you got that. Oops. Hold on. Well, you can even do it this way. You either want to get in towards the top of this wedge if you're going short. You don't kind of want to get in the middle because you don't know whether it's gonna go up or down,
Correct. Yep.
right? So right here, you should have stopped out right here and then thought about resetting and getting in after all this, after this, because this could have went down and confirmed there. There's two types of traders, right? Confirmational traders and then the breakout traders, right? The breakout trader gets in as soon as it breaks a trend. The confirmational trader gets in once it confirms right here, and then it goes down. So could you have locked in? Yes. Did you get stopped out this or you get hit your target?
No, I think I got stopped out over there. I
And
can tell
another
you the
thing,
next.
your targets are kind of far.
Yeah, it's 5 points.
It is, it is, but you got to think, okay, where's your logical support? So first support would be this moving average right here, your closest one,
Okay.
right? So you could have targeted that.
Okay.
But if it holds this level, you got to be careful. Because then you get in right here. So let's say you were green. You got in here. You didn't stop out here, which you should have, right?
Yes.
The worst stop out, you should have stopped out up here.
Yeah, my stop
Unless
was
you
too
have a
high.
cushion.
Yeah,
Your
my
stop out is way too high up here.
yeah.
You could have lost, look at that's 4 points with two contracts, that's $400. Can you take $400 loss?
Uh, right now, it depending on the account, of course. If it's account is
Let's
in
just well,
green, then it's fine.
we're pretending that you're gonna start off with your live account, right? We're not starting off with the 100,000 or 50,000 unless you're gonna do a prop firm. If you're gonna do a prop firm, then start out with that.
Yeah, no, 50 400 is a lot.
So like in a prop firm, if you're doing the $50,000 one, I would stop out max at $250 on
Yeah,
one
makes
trade,
sense.
max. Because remember, on a $50,000 account, your max loss is 1,500. So you would have to lose 10 trades for you to blow up your account.
Correct.
If you want to make it less, then make it 150.
Yep.
But $400 is high unless you have a cushion. Remember, if you got in right here, your stop, if you really want it tight, would be the break above there. A reasonable one will be a tick or two above here because you have this structure. So that would be probably like $200, $250, maybe. I don't know.
2 points. Yeah.
Yeah, 2 points.
Two contracts.
So that'd be $200 instead of losing 400 or 425 up there. Um, so that's one thing. What I usually use for a stop, like I said, and this depends if you have a cushion or not. So if you have $1,000 cushion and this is only $400, then for all means let it breathe, you know? Let it breathe and then maybe it will play out and then maybe it will hit this level. But if this is your first trade, then I would try to keep it tight. because you want to try to keep it tight because you're able to reset. You're able to get in. Like maybe you could have stopped out right here, been red $150, $200, and then got in up here for one reason or another, right? And then you got up here, and then you're up. You're up already, 3 points if you got in over here. And then you just made back the 2 points that you lost, plus you made $100. So you could go from red to green.
Yeah, yeah. This one eventually reversed up, and I got stopped out. If you look on the next slide or next,
Yeah,
so
you got stopped out right there.
it took a long time, but it did end up stopping out. Of course, I should have exited long time before that because it crossed up and
Yeah, and then look at this little doji right here. And you got in way down here. And stick to your stop loss. That's another big thing that new traders do is they will move their stop loss or not even have a stop loss. Just take it like a professional trader and chop your trade off early and reset and get in. Because remember, I told you it barely crossed.
yep.
And look at that's only 2 points from here to here. And remember, I told you it's going up, higher lows. That's another thing you should look for. Okay, it created one higher low here. And so the first thing, your strongest move is going to be on the first confirmation. So it should have went down there. So that's one tall tale sign that hey, maybe buyers are buying it up, right? So they bought it up here. Okay, hit the 50, broke it, came back down. The buyers bought it up. Here's the buying pressure right here coming in. 2 candles before the move happens. You see the buying pressure coming in right here. These candles should be almost as closer to these. Remember, I said the volume gets sucked down. Volume gets sucked down before it blows up.
But what confused me here is after it went up on the left side, it did a lower. Um,
A lower high?
yeah, like so
Where?
the
Right here?
yeah uh, no, beside it. So you've got a low on the right side. Yes, over
Over
here.
here?
Yeah. So it did a low there on the left a little bit of like 2 3 candles before your circle, and then it did
Yeah.
went down. So that's why I was hoping the trade will be better or it will still go down because it did a lower than the one before it and the one before it as well. So this confused me a bit, but at the end of the day, the trend is up still.
You still could have got out with 3 points, maybe,
I
if you
did.
would have
I should.
nailed this one. If
Yes,
you would
I
have
would have
nailed
now.
this one.
Yeah.
Because you see the 10. Look at the 10. Look at the 10. Look at the 10. Look at the 10. Okay, it's flat. Okay, and now it's starting to cup up. You see price action, right? You go down. You should probably locked in some right here. And then and then once it held this doji right here, this doji, remember I always say dojis, look for them. Where there's dojis, squeeze points happen. Squeeze points always happen at dojis.
Up or down? Like, how do you know if it's gonna go up or down?
Well, look
The
at this is
squeeze.
bullish doji, right? Because it's a longer bottom wick.
Okay.
And then you want to see up because it's above the 10. It's holding the 10.
Oh, I see.
It's holding the 10. So that doji, if you look at volume, it's probably going to have a lot of green. See?
Yeah.
and then it squeezes. Where's that doji? See, there's that doji.
Mhm.
So that doji coin, look at the doji right here. The doji's right here. Let me move this shit over here. Let's see if we can line it up. See that doji? It lined up with that green candle. It did beat out all these red candles. And look at the volume. You see more green, right? You see that? There's one, two, three, four, five, six red candles in a big old consolidation zone. This consolidation zone, the volume is way bigger. You see that? And then that doji right there, volume beat. Where does it have to hold? It has to hold that doji. It has to hold that doji level because the buyers are in, right? The volume told you that the buyers came in. So if the buyers are really in, then holding the 10 and holding that doji is going to tell you squeeze up. But if it breaks below and it closes below, this candle would have closed below right here, then I probably would have said it's probably going to come down, tag the 100 because it didn't tag it right here. And one thing that always happens is if it elevators down, it stair steps up. Look at it, elevator down, and if it shies or shies something, and it's gonna stair step up. Where's it gonna go? 100, the 50 first. Psh, it should have done the 100. I would have liked the 100 right here better. I would have liked for it to go right here, then right there, and the next one. See how it stair stepped up? So you took it, but there were some indicators that would help you um, either stop out break even or stop out with 3 points or stop out with, a winner instead of losing out. And just keep in mind that you're gonna lose some and you have to accept the fact that you're gonna lose some or win some, but these little things might help you prevent the stop outs.
Definitely, I should have stopped it earlier, so I don't have to wait until the stop
Yeah,
right.
that's a long time to be in a trade.
Yes.
That's like an hour or 2 hours. You want to be in a trade maybe 20 to 30 minutes max.
Okay.
Sometimes you'll get them in 5 minutes. Sometimes you'll get them in 15, 20 minutes. It just depends. But if the longer you're in the trade, the likelihood that it'll go against you.
Yeah. Well, if it's going the wrong direction anyway, should not
Yeah.
stay.
So it says right here, you got the cross right there. Everything looks good. The EMAs look straight point down. But then right here, it kind of looks up or flat. And see, this is a nice little indication. If you would have paid attention to your dojis, you probably would have noticed that there was going to go down more. Did you hit your target on this? Nope.
Probably not. I, no, I'm not. I don't think I did on this one. I put it in notes. If you look at. So yes. So uh, this is basically I got stopped out. Yeah, on this one. So it went against me again. But now I understand. I should have looked at the indicators, how they're moving up, like the 10. It was
Yep.
moving up, so I would have stopped it before getting into a big loss.
No, what's going to help you, what I think is really going to help you is adding the RSI.
Hmm.
Because right here on this base, see how you have that horizontal line? The RSI probably was higher lowing. I'm most 90 to 100% sure that the MACD and the RSI were probably higher lowing.
Okay.
So we're gonna add that to your because this big move right here, this big move right here. Let's just say that the RSI is right here as a hypothetical, right? The middle one is a 50. It was probably like right here up top, and then it went all the way down, and then it started creating higher lows while price action was still flattening out. And it started this, and then it probably went like this. But we won't know until we'll add it, and then next week I'll show you how to use that as a as an indicator because it's a relative strength index, right? So if it's going down and it's building strength up, the RSI is going up. That means that the buyers are coming in and building up strength to go up. But this one, you got lower highs. And like I said, the trend lines will help you right here. If you would have drew a trend line like this, you would have saved you because you would have been like, okay, broke the trend, and now what you want to do is confirm right here in this level and then go up. Because that's a falling wedge breakout. And this is just price action pattern, right? You falling wedge right here.
Sure.
And you got one right here. When I draw trend lines like this for a falling wedge or a rising wedge, I usually draw the top one first, and then I just copy it, and then I just drag it down. Because it gives me that same angle.
I see.
And same thing over here, you got a rising wedge now, right? So you got one like this. So this one could go like this, all the way to right here, and then go down. And you'll see like that, you'll start to see price action. You'll be like, oh shoot, I see a falling wedge. Okay, where can it break out to? If it breaks this, come back right here. I think it's gonna go to right here, right? So it goes right there. Where's it go? Look at where it resisted right here. Right at that level. Always look left. Always look left for structure. This is kind of like a fat consolidation zone, but it says that it's gonna be a resistance level. But you could do that zone right here if you're a supply, right? If you're a supply and demand, you're like, okay, there's a zone down here. Where's it gonna go? Right here. W. A W play, if you're with the elites for the beginning, a W play was a big one. If it holds the center, look what happened right there. You see that?
Right.
Higher low, boom. But on this one, you got in right here. Your stop should have been in right here. Keep it tight, especially if it's your first one and you're going short. Remember, you gotta think like a trader, not like a normal person. A normal person would think like, yeah, it's gonna keep going down, it's gonna keep going down, and it's just gonna keep going like this. Sometimes it does do that, but if you see a falling wedge and it breaks the trend right there, then already start thinking possible reverse. Look at RSI. Is it creating higher lows like this? Start to see the divergence in that price action. And then once you wait, you just wait, right? Because let's just say the 50s right here. And hold on. Let's say the 50 is right there, the 50 RSI, right? And this break right here, RSI was creating lower highs, and then it breaks the 50 RSI. At that time, you want to see confirm the 50 RSI for a continuation pop. But yeah, your stop right here should have been, remember we just corrected the stop. We're going to add the RSI, but look at the volume. 2 red bars. Even though there's like 1, 2, and a couple of white ones, the volume, look at the volume. Pay attention to the volume. 2 red and a bunch of green surrounding around it. You see that? Over here, you see more red. Way more red, and look at it's coming down, of course. But look at the volume. Pay attention to that. So we got the cross lung there. We got the entry here.
I think I entered here very,
Yeah, you entered high.
yeah. By the time I clicked, it was up there.
Yeah, no worries. What I would do, see this doji right here?
Hmm.
I would draw a line. Draw a line and then look at the candle. If it's holding above it, then get in. You don't have to wait till way up here. Remember, I usually say wait for the pullback low, which is right here, and then get in one candle, one tick above this,
Hmm.
which would have got you close to where you got in. But look at this level right here. It had 1, 2, 3 dojis, and this doji held right here. You see that?
This is still a wrong entry because I think it was trending up and I took it down. So it was still, the
Oh,
whole
you
thing.
took it short?
I think I took it short. Yeah, didn't I? Oh, it's a cross up. No, I should have taken it. Yeah, I took it
Yeah,
up.
you should
Sorry.
have took it long.
Yeah, I took it long. I took it long. It's a cross up. You're right. I took it
Yeah.
long, but I didn't hit my target, and it just
See again the dojis. Pay attention to the dojis. Because look, it resisted right there. So prior resistance becomes support, right? That's the thumb of rule, right? Prior resistance right here becomes support right here. So this candle right here should have held.
yeah.
If it didn't hold and the next one hard open closes below it, then get out. You could get out a little bit early.
I think what happened there was news, and I did not pay attention. What time was
Yeah.
this? Because this big red doesn't make any sense. I think there was
It's at
news.
market.
Yeah,
It was at lunchtime.
1 o'clock. I think something like this.
I think there was a speech. I think there might have been a speech.
Yeah, 102 that this went down. I didn't pay attention that there was something going on.
Yeah.
Um, so in general, I think it was a good setup because everything's going up. But uh, you
It
know,
was.
this, yeah,
It was. But once you start seeing a lower high right here, and then like I said, this doji level, like the lower high right here is your first thing, like, uh-oh, I might think about getting out. And then if it breaks that doji level and the 10 SMA right here, then I would have stopped out a hard open close below there.
right,
Worst case right here at break even, if you want to do
correct.
break even, or even right there. Like I said, just 2 to 4 ticks below that 10 SMA. So those are kind of little signals that you should use for, oh shit, it might fucking go against me. So, a lower high, a break of that doji level, a break of the 10. That's three bearish signs. And where can it go? It can go to the 50. It could have bounced right here and then went up.
Yeah, but that red was like instant. Like
Yeah.
it just it was like so fast. You can it just
Yep.
it hit the stop like no so fast.
And your stop was way down here. It looks like.
It is. Yeah, I think I have it. I can't remember where was it the stop.
So if you would have been right there, your stop should have been right here. Definitely.
I had it at the previous green low.
Yeah, right here. But it looks like it went way, oh, you went way over here.
Yeah, I went way too low.
No, too far back. Be the first structure, whatever the first structure is.
Okay.
So here's the first structure to this entry, right? Oh, you got in right there.
Well, I got in
But it
late,
should have
so
stopped
that's
out right there.
yeah.
Worst case right here. But hey, you're gonna learn. You're gonna learn.
Yeah.
Just keep your stops a little bit tighter.
The reason I put the stops sometimes lower too low is because sometimes it twicks down and then it goes back up. And and they do that on purpose, I think, just to stop people out and then continue with the
They
trade.
do, but once they break all these levels, look at they broke three moving averages right there.
Yeah, no, that was very fast. I think there was a speech. This is why.
It should, I know, but you still had one candle right here, even if you got stopped out. Like if you entered there, your stop should be one tick below this pullback low,
Correct.
not so far back over here.
Okay.
And then especially like, okay, if you don't want to be there, let them put it one tick below all the moving averages right there. Like make that your final stop.
Okay.
Because that's still a pretty big stop. It's like 3 point stop from right here to right here or wherever you got in,
Yeah.
which is $300. Remember, it's whatever you can tolerate, but you want to get in closest to your stop. So if your stop, when you see these candles developing, right, coming in, and it tags your level, be like, okay, this is my optimal entry right here, 1 to 2 ticks. That's what I want to see. I want to see a tag of the moving average. If it tags it and then bounces up immediately, then you'd be like, okay, my stop is one tick below there. What's my best entry? Wherever I can get it closest to that level.
I see. Okay.
Know what I'm saying? Because you're seeing it come down, it breaks out. Be like, okay, worst case, 666. Okay, if it hits that, I can get in at the tag, but remember, sometimes it goes way below it.
Yeah. And in
This
this
one will
case, they're
crack
all
below
stacked
it.
up. Sometimes the indicate the 50 the 666 is way below. In this case, they're all stacked up close to each
Yeah,
other. So yeah, makes
I
sense to
would
me.
say that's strong support or strong resistance.
Hmm.
So look, it went up with support. It's gonna bounce. Remember, bounce maybe 4 to 6 points. Lock it in. Look, from 34 to 38, you could probably get in like 5 points from the 666 up there because it had just barely crossed. It's a first touch. Remember what I told you? The first tag is always going to play in your favor more than your second or your third or
Yeah.
even your fourth. So it breaks through, comes back, tags it. If it starts creating a lower high and comes to tag another time, then that time it's probably going to bust through that level. If not, it's probably going to do this, and on the third time, it's going to bust through that level. And
Okay.
sometimes it does it the fourth time. The fourth time, it usually cracks through that level because it's called a bouncing ball short. So it goes like this: one, two, three, and then the last one it hits. But it's more like level, right? So it's bounce. The first bounce is bigger. The second bounce is a little bit smaller. It's still at the same level. And the third bounce is gonna be like that. price action is getting closer to that level. If it doesn't break there, then on the fourth one, it's gonna break.
I see.
And same thing for the up. If it hits its head up, 3 or 4 times, and it's getting closer and closer and tighter, and it's either gonna be a rising wedge breakdown, like kind of this, like this, a rising wedge breakdown, or it's gonna be like like that, and it's gonna just go. But you wouldn't get in until the confirmation of the trend. And this one you got in short again?
This is what's crossed down, so I went in.
Short. Yeah, it looks like you got in right there. And then that sucker got you. It got bought up. Did this get bought up right away?
So it's probably an indication that careful, it's it's switching.
Yeah. Especially how it tagged the 10. Well, what if we had more indicators? The RSI and the MACD would let us know um the strength of that.
I stayed in the trade, and then eventually it twicked out. Uh, it
Yeah.
stopped me out at the right at the top.
So see that doji? That would be my first sign. Like especially if I'm in short. For like easy, this would probably be his grade A setup. He would get in right here, or maybe even at the 50 with the stop right here. Or your stop's way up there.
Yeah,
It's really high.
yeah, because I have it. I think at 5 points automatically or something like this. I might
Yeah.
change it. Yeah,
Yeah, I would set it to 2.5 points. But remember, you got to get in at your best optimal entry. So your entry at the 50 SMA or anywhere in this area right here.
okay.
And your 2 points might have been up here. And I would have probably adjusted it down to here and then let it ride. If it going down and if you got in at the 50, that would have been probably like 3 points. Like I said, this candle would signify especially because it created a higher low. And look down, there's a little fair value gap right here too.
Yeah, that I don't know.
For Dow, there's a little fair value gap. I know I probably had, but it broke
Yeah,
above.
yeah,
But here's the buyer pressure coming in. As soon as it breaks right here, breaks up, come back, confirm right here. I'm already looking to get in for a higher low confirmation. But like I said, this area, the RSI might have helped you identify like, okay, I'm not getting in right there. I'll wait for a higher low to create.
Yeah,
So it closed down right there.
that was today. I missed it.
Yep.
It was a really good one.
Yeah, this one was a beautiful one. This is grade A setup. Like this should be your grade A setup right here. And this is close to easy setup, so easy he can let you know. Yeah, because I think easy got stopped out over here, and then he got in either right here, somewhere right here, and he wrote it down.
Yeah, even the one after the same thing. It was really nice. Missed the
Yeah, this one.
opportunity. I think this. Put it there. Yeah, might be this one. Oh
Oh,
no,
the
this was
cross
after
up,
actually. Yeah,
up.
this was
Yeah.
cross up.
Yep. Remember, if it elevators down, it's gonna stair step up. So look at it. It kind of faster down, and then look at it just taking baby steps.
Yeah.
Every moving average, beautiful moving average play right here. Because it creates inverted head and shoulders, kinda. You do that one and then a little
I would have been
shoulder.
worried about this one though, if because the 50 and the 100 were kind of slightly sloping down. I would have been a little bit worried about entering them.
Yeah, but see right here, see how it starts pointing up? When this one starts pointing up with the 10, look at the 100's already pointing up too, or flattening out.
Right, okay.
You see that? Remember, the next moving average up has to flatten out,
Oh, okay.
right? So we'll look even right here. It busts through the 100 and it's pointing up. The next one's already starting to flatten out. See?
I see.
See how it starts to go like this?
Mm.
That's what you want to see. But if this one was still like this, then it probably would have conked out right there. Would have been like that. See, so after it busts that level and it's flat, you want it to hit this level, whatever that level is, come back, hit right here for potential to hit that level now.
That one will flat out as well. Yeah.
And then be flattened out, hits right here, and then it breaks through, comes back, and then busts through that level.
What time was this one? Can you scroll down? Yeah,
Um,
this is around 12:40, 45
and
or so.
remember, that's why between like um when it's 10:30 Central Time, when the market is closing around 8:30 or before 8:30, that's a power hour for Europe. So big moves sometimes happen around that time
Okay.
between 8:30 to 10:30
Yeah.
Eastern time.
From
Eastern
that
time.
zone, it kept going up like crazy. I mean, it
Yep.
went down, but it's just if you kept it long, it would be really nice.
And that's just what you gotta just pay attention to those moving averages. But next week it's gonna be another short week, but futures is still open.
Okay.
Futures is still open. It'll open up at 3 p.m. on Sunday, and then I think it'll close at 8 a.m. or 10 a.m. Pacific Standard Time um, on Monday, and then it'll reopen back up at 3 p.m. on Monday, Pacific Standard Time. It's probably going to be slow, but just keep an eye out if there's any headlines. Start paying attention to the news. Like if there are any war news, is the market is the market talking more bearish or is it talking more bullish? Because we're gonna slowly start introducing market psychology. That's where you get in deeper into like, because you kind of see the news trying to manipulate the public and the retail traders or the new traders, so they can be like, oh, the market's gonna continue going up. I'm gonna get in long when the market's really gonna go short.
Mhm.
Remember, buy what is it? Buy the news or sell the news, buy the rumor.
Yeah.
So anything that the news is talking about, sell it. Like do the opposite of what the news says. Because then the
Where would be
market,
the, oh,
what's that? Go ahead.
I apologize.
Go.
Where would be the best place to look for the news? Would it be like on Thinkorswim under the news or actually just,
Just like
well,
Google, whatever you use, like Yahoo, Yahoo
okay,
Finance, Market Watch, any of the
okay,
financial things, Investopedia, um, Binance or not Binance. What's that one? Um, Benzinga. All those like financial news websites and magazines. Just look in there and look at what they're talking about. Are they talking about a soft landing? They'll start to push that, even though it's not going to be a soft landing. Or they say the reverse. They'll say, oh, it's gonna be the worst crash ever, which it could be, but not when they're saying it. It's gonna happen after. 'Cause remember, they want to instill fear. You got to look at the news as they wanting to instill fear or greed. That's their main objective. So look at the headlines. Are they instilling fear or are they instilling greed? What are they trying to do? And remember, Warren Buffett says, be fearful when people are greedy and be greedy when people are fearful. That saying alone should help you see the news in a trader's perspective instead of a normal person perspective. Because you don't want to panic when the normal people are panicking. You want to be greedy, right? And you want to be fearful when normal people are greedy. Any questions? I think that pretty much
That's it.
breaks it down. Another chart. And I've been using the 5 minute chart a lot. It helps a lot. I can call out plays and they usually play out a lot better than they do on the 1 minute. So I know Dell, he uses the 5 minute majority of the time, which is, I think it's a good practice to have. Later on, you might want to be like, well, I'm getting in a little bit late. If you feel that way, Dell, then maybe think about jumping into the 1 minute. But I sent you that video so you can look at how to get in, look at the 1 hour and then the 30 minute and then the 15 minute and then get in on the 5 minute. And I think Brandon, I think I sent it to you last week or 2 weeks ago. But Connor has a great method where he draws trend lines or horizontal lines on the longer time frames so he can, get in better and he'll attach them to all the charts. So like that it can show a 30-minute entry, 15 minute, or resistance or support levels. So that's another way to do it. That's what I'm used to. And Brandon does the same with the daily and the weekly levels. Well, he'll draw those trend lines on the weekly and the daily to see where price action is in correlation to to that particular day.
I don't think you did send me a video. I'm looking now. I don't know if you sent it to me. Oh, yes, you did. Okay, I got it. Yeah, the 1 hour, 5 minute, 1 minute
Yep,
strategy.
yep.
Yep.
Take a look at that if you haven't already. Take notes, maybe watch it a couple times so you can kind of get a better idea of how to do that. Because that's gonna help you. I think that'll help you a lot. And Luna, the RSI and the MACD. We're adding MACD and RSI to Luna's setup. Dell, I think you already use those. And you're pretty familiar
Correct.
with those.
Yeah.
So we're just gonna help you improve that game a little bit better too. As I know it would have saved easy today. And we called it out pre-market today. We're saying pop the short. This was in the morning right before the morning. The first thing that I saw was price action basing. This was at 5:30 in the morning, 5 o'clock. So I seen this buying pressure right here coming in with this strong wick, and it's still right here. Look at price action, how it's flat or even creating lower highs or yeah, lower lows. So there's a lower low. and another lower low. Look at the RSI. The whole time went up this whole section right here, and then it's still going up. I don't draw trend lines like that. What I usually do is I look at the last lower high. So here's the last lower high. As long as this level doesn't break that level, or even if it doesn't matter, even if it's the same, as long as right here it's similar, you want to see a higher low on this one, next one. See how it created a lower high or a lower low on price action, but on our side it created a higher low. So right out the gate, we're saying pop the drop. Why were we saying pop the drop? Because it was basing and there's strength building up. Building up right here, and MACD was the same way, even though you could kind of not see it. So where is it going to go to? The last resistance. The last resistance is the 200 SMA right here. I said it's going to pop. And this is Easy's grade A setup with the 10 and the 50 right here. The confirmation he got right there. Probably got in somewhere right here. Stopped out on this candle right here, I think, which is good. It was good because he was able to reset. He had a tight stop. He was able to reset. He was red. And then he got in. He got in again over here at the break of the 10. So even though he got stopped out over here, he was able to get back in here and take the real trade down. And locked in, he went from green to red. That just goes to show that you can, hey, you can be wrong some of the times, right? Or be early to the party. You get in right here, you stop out right here with the tight stop. Hey, there's resistance right there. Since there's no other moving averages up here, there's no other resistance other than the standard DAV. So the 200 line up with the standard DAV, the Bollinger Band, the Keltner channel. There's three resistances right there, right here. And look at the RSI. For Easy, what he would have wanted to see, since he got in right here, he would have either, there's two ways that he would have wanted to see this. The 50 is right here, right? That yellow dotted line. Let me scrunch it up. So if he got in right here, because the pullback high is right here, or even if he got in somewhere right here. Not too sure where he got in, but I know he was in sometime this area right here. And his stop was right here somewhere. What he wanted to see, I saw RSI strength going up. What he should have seen right here on his grade A setup is either RSI hit the RSI 50 and hold and go down. It would have went down like that. It would have been down right here. The second other worst case scenario would have been like break above the 50 and then break back down. That's two. If you don't get that and you get the RSI come back up and hold it, you know it's probably going to be a pop up either to the overhot or whatever resistance there is up here. Whether it's Keltner channel, support channel. Look, if you're a supply and demand zone type of guy, I'm like the type, I like dojis. So I had this doji right here. You could have had this doji. So you could have took that area right there and look, lined up perfect. Or here supply and demand zone, you could have drawn out this whole thing. Right? So you had multiple things right there. That's the highest that it can go, especially with the 200. So you could have got in short right there. So like I said, the resistance would have been the RSI 50 or overheat or a price action structure. And then you could have got it. And then it broke down back below the 50, confirmed it right there, and then shot down. And then look at what happens right here. You're looking for the confirmation, right? I said I wanted easy to look for the confirmation up or down right here with the RSI down. It did it on the way down. See, it broke below it, came back, confirmed it, and then went down to the overcool. That's what you want to see. And then look, hit his 50 SMA, 50 RSI down. So Luna, pay attention to see those little signals that I just said. You'll start to see it go up, up, even though it's spacing or going or still going down. Look for that. You can even do it on the way down too. For short. Where's your short? A good one. Here kind of a little bit. Not really. See right here, base is up. So the base is right here. The basis. See that? And look at lower highs, lower highs, lower highs. Even though it's bait or flat, the RSI was signal where see where it's potentially gaining strength to head down or up to. So add that. Um, even though you guys are not trading, take screenshots of your potential trade or just call it out and take a screenshot. See how where you would have got in, where your targets are, or sim trade it so you can actually get the targets and all that, and then take a picture later if it played out or not, and then we can help you identify potential things on the chart or indicators that'll help you uh, either get out of the trade, break even, or help you adjust your stop loss a little better, and then give you things on what you can improve, either price action um, or patterns or anything like that that is going to help you kind of navigate the chart. But thanks everybody. Is there any questions? And if you're reading that Trading in the Zone next week, I'll have some questions on for you guys. If you guys are reading any psychological trading books, that are not that I didn't recommend, for all means share, see what you're learning. Judy, she shared a couple books. I think there's another member that shared a different book, The Power of Now, or The Biggest Losers or Winners. I'm still gonna start those here soon, and then I'll give you guys my feedback. But definitely keep on learning about the psychology of trading. It's gonna help you in the long run. And practice screen time. It's practice the good patterns, the good price action, and the confirmation, definitely. Cool. If you don't have no questions, I'll see you guys next year. Happy trading, and see you guys next year.
Thank you.
All right, thank you so much.
And no problem. You guys have a great weekend. Take care.
Happy New Year.
Happy
Take
New
care.
Year's.
Happy New Year.